Investors will be hoping for a better day of trade this morning after ending weaker in the last session. The rand fell the most in 7 months after U.S. inflation came in higher than consensus forecasts. The JSE was flat yesterday and the all-share index ended at 75,520 points. Chief Investment Officer and founder at Makwe Fund Managers, Makwe Masilela, joins us to look at these and other leading business stories. Makwe, good morning. All right, let's start as we always do on the back of that information, how markets are faring, bearing in mind what's happened with that U.S. inflation announcement.
Yep, as much as it was disappointing, this morning we managed to open up marginally up, and reason being, we've seen it happening before, that for the past 2 months we did manage to get inflation data, which was surprising on the upside, but markets after a day or two managed to recover. The problem here is that this is the third month in a row. We'll definitely continue with that narrative that it's a blip. I don't think so. Hence, we've seen the U.S. markets being marginally down yesterday, and yes, we'll also be looking into the European Central Bank rate decision, where we think they will leave rates unchanged, but the most important thing will be whether they're going to prepare us for a possible rate cut comes June, because with the US already we know that it's no longer going to be happening in June, and even July it starts to be in the doubt. And bearing in mind that the longer it takes for it to happen, now it starts getting into part of the debate when it comes to the US national elections, and their decision might be intruded by that. So people will start thinking maybe next year, probably they might be having a case. And also Chinese consumer inflation just managed to go up just a little bit, but their production inflation unfortunately continue to fall, meaning these inflationary pressures are really serious in that country and definitely will hamper their economic recovery.
All right, well, let's look at oil prices, and we've been talking a lot about them this week, extending gains this morning, rising $1 per barrel in the previous session. What is driving the moves, and does it mean anything for our local fuel prices?
Unfortunately, it only means bad news for us, because if it continues to go up and the rand maybe continues to weaken, then unfortunately our petrol prices will go up. But the reasons that are driving oil prices now lately is the tension in the Middle East. As we see that if there are no improvements or people start losing hope that there will be some ceasefire, then becomes negative for oil prices. And already we have seen the U.S. crude inventories jumping. Then the minute they increase, that's an indication that there's no demand and inventories are high. And also we know that Mexico have kept exports, reason being they want to supply their domestic refineries. That is also having an impact when it comes to supply.
Okay, let's go to the competition tribunal, Makwe. It's given mining and materials company Afrimat the green light to acquire 100% of Lafarge South Africa, as well as its subsidiaries. Talk us through the specifics of the case and what it means now for Afrimat's service offering moving forward.
Firstly, we know that as much as the guys will be paying almost $6 million US dollars, which is almost 112 million rands, we can say it's not too much, but the guys have to procure or make sure that they repay some loan accounts equating to almost 900 million rands. So that we need to put into the whole equation of the selling price. And it is, yes, a good deal for them as Afrimat, because now the guys will have a national footprint, especially when it comes to the quarry and ready mix cement, and also for them to have exposure to the fly ash operations that will help them with the cement extender market, which is good for them. And we've seen in their previous results that their construction or material segment continue to improve. So with this, then definitely the improvement will be enhanced. And that's serious about the transaction, because they even got their CFO to be in charge of that integration of the whole transaction.
Yeah, especially in a context where, again, South Africa's on this renewed drive around infrastructure, building, spending, development. So we'll see how that plays out. Let's go to this finally. Shoprite has announced that it's teamed up with 4 global retail giants to launch this new collaborative retail venture capital fund. What do we know about the tie-up and what it offers investors as well as Shoprite consumers?
You know, the good thing here is, I mean, the guys will be spending almost 125 million US dollars over a period of 5 years. And I think we know the likes of Woolworths are part of that, but that's only Woolworths, Australia and New Zealand. The likes of Tesco will be part of that. All they're doing is that to invest in technology-driven startups and scale-ups, and mainly concentrating on improving packaging, the likes of product traceability, which will also be good. Also, when you look into packaging, and also on sustainability issues, that is the waste products and also an emission. So it's a good move, not just for the 5 retailers, but also for me and you as consumers.
Well, I hope so, especially, you know, when you think about what the agriculture minister is saying and the depression that's happening across agriculture in South Africa and what that means for food inflation. If, as you say, there are going to be some benefits, you know, for ordinary consumers, then so be it, and it's welcomed. Makwe Masilela, thank you very much for your time and for your analysis. We appreciate it.